Just about six points away, Niraj, 7 points away from 25,000. Now it's just a number, but some things are not. Age is just a number, but 25,000 is important because the kasrat to reclaim 25,000 this time round has been a painful one. Fraught with doubt, fraught with, the question about whether we can actually get there. So first, let's get there and see if we stay there. But this is going to be important this morning. Yeah, and a trending morning. And that's why it will be important to talk to Dinshaw Irani. But a trending morning because we're now trading at the high point of the day. We've not sold off after that 1% uptick. And this is a beautiful chart. On that beautiful chart, let's get in Dinshaw Irani to speak about what he thinks is in store. Dinshaw, the folklore, thank you so much for joining in. The folklore is that you haven't changed these specs that you're wearing because when you wore these, the markets did well. Now, do we have to thank your spectacles for this move that has happened?
Niraj, thank you for having me on your show, and a very good morning to you and your viewers. Actually, Samir has told me to weld them to my head. I have not changed my glasses at all, so that's why I keep wearing these. But frankly, I believe that this up move, I saw you guys arguing with the 25,000 because I don't have any doubts. Not today, maybe along the course of the week. But the fact is that this move, the government's move on giving out this GST 2.0, I think it's a conscious effort to not only right the balances, but I think towards consumption. I think they were also worried. It started off with obviously the new RBI governor coming and infusing so much liquidity in the system. Then came the budget where they upped the exemption limits for IT from 7 to 12 lakhs. And I think this is, and again, the kind of infusion that the RBI has been doing in terms of not only liquidity, but also in terms of cutting off interest rates. And I think this is the final move that the government could have done. I remember the Pranab Mukherjee days when he halved the excise duty when India was going through a crunch. And you saw the up move that happened after that in consumption. I don't have any doubts in that. I think the uptick will happen. Enough liquidity in the system. Money is cheap. I don't have any doubts that consumption will come into play, and obviously it will start reflecting in fundamentals.
Dinshaw, what would be a very good morning, Tamanna here, and thank you for the spectacles and your great contribution to the bull run this morning. But what would you say to those who have been sitting with dry powder and sitting with cash? Because the thought might be that maybe I'm missing the bus. But is there much more to come, you think? Because this is just the first announcement. We're yet to see to what extent this plays out.
Yeah, so Tamanna, actually, I think the ones who are sitting with dry powder have missed the run-up, the recent run-up, actually. And I don't see any reason for them to stay on that dry powder. I think they should move into the markets of liquidity. I mean, as I was saying, that we actually never keep any cash with us. And why is that so? Because we always believe that there's enough and more in this market, opportunities available in this market. Even when the market's on the way down, you have stocks like a Bharti, which doubles actually from the time the market has been on the way, not doubles actually, up 50-60% from the time the market had hit a last peak. So obviously there are obvious options available. So never sit on any cash, and if we are totally fully invested. And I think even going forward, as I was saying, that unfortunately this quarter, the June quarter, the numbers weren't that exciting. Despite that, the market has been hanging on in a very tight band, 1,000-point band literally, which is nothing as compared to what the one who was sitting on cash would expect. Obviously, it was the guys who were sitting on cash were looking at corrections of 10-odd%, which never came by. And I don't see that going forward also, because with this kind of reforms coming into the GST play, with GST being cut so sharply, I think demand will come back. And obviously the September quarter may not look that great, because I'm told that the council meeting will only happen in September, which will reset the rates. So maybe till then things will be on a standby. Obviously the consumers will wait for a lower price to come by. But looking at the December quarter, I don't have any doubts that the festive season will ignite that fire on consumption.
Okay, so what are you buying then? Dinshaw, for people who are watching now, they're wondering now, what do we buy? You come back to the consumption story, which, didn't have core believers in that entire story because the results didn't bear through. But would you look, for example, at footwear players, and we were talking about it earlier in the day, who have been getting a tough fight from the unorganized market and players? You come down to 5% GST and you're in the game. Would you look at some players like that?
So not really, Tamanna. We're not changing our focus too much. I think we've been in the consumption play all along. In fact, very jokingly, we were talking about this morning that even though people will say what $2,000 on an AC, if that slab comes from 28 to 18, hopefully that is what's going to happen. Maybe they will not buy AC today because anyway it's pouring, winter's on the way. Maybe they look at it in summer, and what do they do with that 2,000 extra that they were planning to save? They'll spend it on food delivery, home delivery, quick commerce. So I think we're in the game already. I don't think we're changing our focus too much. However, having said that, I think the two-wheeler players should definitely look good going forward. We already had a Bajaj Auto with us. We're looking at another two-wheeler player, which we think will benefit out of this because a bulk of their vehicles are into entry level, and they should benefit with this kind of a move, with this kind of a cut in GST from those levels, 28 to 18% as such. So,
Dinshaw, what do you do? I mean, do you make a tilt of the portfolio away from capex-oriented names, if any? Whatever your exposure might have been in capex thus far, onto consumption. I mean, there is a bit of a pop that has happened, but is there merit in trying to tilt further towards consumption from where you are right now?
Yeah, Niraj, actually, I think this is a long-term up move if it comes about. I mean, you've already seen last 4 quarters, including the June quarter, things have not panned out for most of the players. If anything, I mean, on an overall basis also, the earnings growth has been very minuscule. In fact, negative in the month of September, the quarter of September, and then mid-single digits kind of growth rates. So I think those will pick up. And obviously the ones which will push this will be, I won't call them consumption related names, but I think more of discretionary spends, the high ticket discretionary spends as such. Obviously, the biggest gainer in this whole move has been two-wheelers. But again, here I don't think it's going to be a very sharp up move for these two-wheeler plays per se. I think it's more of discretionary spends which should do well. And frankly, I mean, Niraj, we were never heavy on infrastructure in our portfolio. If anything, we were into equipment suppliers rather than infra players. I think infra will be obviously
we are at 25,000. We've hit the mark, and you know it's feeling like a celebration because of the painful journey here. And yes, 25,000 might recede, might go higher, and it's a number at the end of the day. But Dinshaw, just talk us through what the outlook has been for you in this space of a lot of question marks, right? What's going to happen with India? India's tariff situation just turned for the negative and still continues to be relative to what was expected. Q1 was better than expected, but really not that great after all. A lot of questions. They've clearly not all receded because of one big move.
So, okay, Tamanna, the fact was that why was Q1 such a dampener? I mean, I don't think it was beating the... By the way, Q1 again, the June quarter again, saw a cut in earnings for the index per se. So I don't think that was a good quarter to look at anyways. And what was the reason behind that? Obviously, it was because of the way the demand has collapsed on the urban side. The rural demand still has been picking up. You talk to all these rural focused companies and they tell you that rural demand is still holding on, and in fact it's turning better with the monsoons being so good and obviously the inflation coming off so sharply as such. But urban demand was a laggard because of obviously the fact that discretionary spends, I mean, as in the unsecured lending had gone down quite sharply because of the way the RBI was looking at that particular area. And I think that has now picked up. So I don't see any problems in that pickup happening again. Having said that, as I was completing my sentence earlier, we were never infra heavy. We were only into ancillaries, which are supplying to infra players. We continue to be there. It's not a big portion of our portfolio. All along, we were very clear that it has to be a domestic focus game. We were never into China plus one or PLI plays as such, because we believe that that story, I think we left that bus long back. I mean, I don't think we can pick up from there as such. It has to be domestic focus plays, and that's why we were always there in that segment. And that's why at this point in time, we don't even feel like changing our portfolio. I think we are fully invested in areas where we are very comfortable with. Having said that, you talked about tariffs. Tariffs again, I mean, I don't think that 25% penal tariff is going to come about. If anything, I think that will be forgotten as such. And 25% tariff that we are at today, I think that also will be negotiated on the way down, because I don't think US can do without the kind of apparels that we have to supply to them, and precious stones and gems and jewelry and all that, because that's the only area which has been impacted. The rest all has been kept out of that list as such. So that also will come off. I think we're in a very good spot today.